Hey, everybody. This is John Wise, EVP of Sales with NewFi Wholesale. Dan and I are so excited to be a part of the AIME community today and give you this partner playbook that we think is an opportunity for you to expand your business by using our non-QM products and specifically NewFi. So thank you for taking a few minutes to hear this playbook. We look to add value to the AIME community by creating products and solutions for your borrowers. And this is just an overview of what NewFi is about and who we are. And I'm always excited to spend a few minutes with my friend Dan Bayer, the much younger and better looking Dan Bayer.
Hey, stop. Good morning, John. Hey, to everybody out there, thanks for taking just a few minutes out of your day to hear what John and I have to talk about non-QM, about NewFi, how we can help the AIME partnership grow. And this playbook that we put together is really a starting point. So anything about NewFi, anything about the non-agency market, the non-QM market, we're going to just spend a few minutes, and then we hope to hear from you. Look forward to speaking again. And if there's anything we can do to help you drive your business and exceed those goals for 2025, we're all about it. But, John, I know we've got some slides to get through, so let's get going.
Yeah, absolutely. When you think about non-QM, the last thing that I'll say before we jump into all this, and we're going to spend a little bit of time talking about NewFi, and so you know who we are, and then we're going to spend a little time talking about products. But the last portion of this that we really want you to stick around for is actually talking about how to find these borrowers, how to market to them, how to use social media and other tools to help you grow your business. Because we do think, and so a lot of people get confused about non-QM, and I don't know. Recently, I've been kind of coming away from talking about it as non-QM, and instead of talking about it that way, talk about it as a solution-based loan product. That's what we do. We are here to solve problems for your borrowers. And sometimes they qualify under the agency guidelines, and if they do, by all means, you should close those agency loans. It's a great product and easy solution. But when they don't, that's when you should be thinking about our products and about NewFi Wholesale. So let's kind of just spend a little bit of time talking about NewFi. This is a really quick piece. We don't want to spend a ton of time on this, but it is important. The company's been around for 10 years now. It was founded by Steve Abreu and a group of people that have been around the business for as long as Dan and I have, about 35 years. Old Headlands, Greenpoint. Steve spent a little bit of time at GMAC, but if you look at the executive leadership of NewFi, it's got a lot of years of not just combined mortgage experience, but combined non-agency mortgage experience. That's where all of us have spent most of our life is outside the agency space. You talk to us about agency loans or FHA loans, we're not going to be as well versed, but if you talk about non-agency solutions, we've all been around for a very long time, creating those products. And then the third bullet, it talks about our relationship with Apollo Athene. Apollo is the world's third largest private equity firm. And that doesn't mean anything to you specifically, but what it means to us is it gives us the capital and the liquidity to be able to say yes to more borrowers. And that's really where our relationship with Apollo Athene plays out. They own 86% of the company, and because of their capital and because of their liquidity, we have become one of the largest non-QM lenders in the country for both non-QM, second liens, and jumbo solutions. So we're most of you guys are going to deliver on a wholesale basis. We do have a correspondent delivery channel as well, but most of the AIME partners are going to deliver through that wholesale channel. So that's just a quick note on the company at a high level, and then some of the other pieces that we think are important as we have grown this organization. We every single day are waking up and competing for your business. We do that in price, we do that in product, and we do that in our ability to service you and your borrowers. We do a NPS scoring for every single loan we close, and the NPS scoring has us world-class service levels. So that's incredibly important to us and should be incredibly important to you. As we talked about, we have two different delivery channels, and then you can find us pretty much in any of the pricing engines that you're using today. We've got a really good relationship with the Arrive community, Arrive, we're in there. You can register loans directly from Arrive. Lots of really cool solutions here to get our pricing. Dan, anything you want to add, just kind of corporately, kind of your take on?
Yeah, to your point, John, the majority of the folks that have been that are here at NewFi have been in this business like you and I 30 plus years. But the difference here is we are not a pass-through lender to another investor. We are the end investor. Our parent, Apollo Athene, allows us the autonomy to make sex credit decisions, right? Does that make sense? Is this logical? Do we satisfy ATR if it's a TRID loan? And if we do, let's find a creative way. The other piece of it is we know that we're the subject matter expert, John, in non-agency or non-QM loans. We're not expecting you, the broker, to be that subject matter expert, but I am, and John is, and the majority of the folks that work here are product experts. When I say the majority, we have a lot of folks that work in non-product, non-sales roles, but let us teach you what John and I are doing today for the next, 20, 25 minutes, whatever it is. This is what we enjoy doing. I enjoy doing this more than anything else. So if we have the opportunity to speak to you, small group, large group, about education, we can teach one person how to originate a couple of different loan programs. We're going to help you meet those goals. That's what we're here for.
Yeah, no, absolutely. I think the whole hope of this playbook is for you to take away an idea to take back to your daily business to try and drive more volume. And that's really, that's why we exist as a company, is to help you close more loans. And so let's jump into it. So we're going to kind of take you through why focus on non-QM. I mean, there are certainly a lot of reasons. If you look back at the history of non-QM, there's never been a better time to be a non-QM wholesale lender. And really it's because people are now focusing on this product as a way to solve problems for their borrowers. And so we're going to kind of take you through a couple different products and why we think the market is driving higher levels of non-QM volume. So let's jump into the first one. So the first one, this is really incredible. We've seen a dramatic rise in the share of investor market share recently. And if you look at this slide, this slide looks back to the beginning March of 2003, and you can see the single family residential market share for investors was about 8%. And if you look at it today, it's been hovering right in the high teens to 20% range. So it's more than a doubling of market share for investor purchases. Even more dramatic is the 2 to 4 unit. A lot of people don't think about this as it relates to DSCR. They think about single family homes, but 2 to 4 unit is an incredible opportunity that sometimes people just don't think about. And that market share has more than doubled. To March of 2003, we were right around 15% market share, and then today you're talking about 32 to 35% market share, more than doubling.
Right. So we get the question all the time, John. I'm gonna ask you the question that happens all the time. Great, I understand this. I've read about this. I've listened to a podcast. Where do I find the borrower? That's the question that our audience is going to ask you. So I'm going to ask it on behalf of that audience. Where do they find these borrowers?
Yeah. So it's a great question, Dan. And this is the first thing that I would say. It's not even on this slide. Is your existing database. You think about all of the people that you refinanced in the last 5 years into 2.5%, 3.5% mortgages. Those are stuck. Those aren't going anywhere. Those are locked in. Those people are not going to sell their property until they absolutely have to. Something that either life event forces them to, or something else happens where they just decide I gotta buy a bigger house or downsize or whatever. But they are stuck in those loans. But what they do want to continue to do is increase their ownership in U.S. housing. And one of the ways to do that is to go buy investment properties. So don't forget, first and foremost, your existing database of people you refinanced over the last 4 or 5 years. They want to go buy more property. And that's why you see these numbers jumping. So start there. But certainly realtors is a great source. Dan, if you're going to go buy an investment property, my guess is you're probably going to hire a realtor to help you do it, right?
Yeah,
so
you're going to go to the beauty of the DSCR. Now, we're making an assumption here that the majority of you that are listening know DSCR, debt service coverage ratio. It's the commercial term we brought into residential, 8-10 years ago. We're making the assumption you know what that is on a high level, but on a simplistic level, remember on a DSCR loan, there's no DTI, there's no debt to income ratio because we don't follow TRID. These are business purpose loans. So you've got the typical list of the realtor. Hard money lenders are great because they want to refinance those loans after they've made that loan for a year or two. Remember, a DSCR loan, just like a hard money lender, non-owner occupied only. So the beauty on this DSCR loan, the reason we talk about financial planners, let's put your money to work. The stock market's running. We've had some really good growth in the stock market. But the beauty about the financial planner market, which I had never thought about until the summer when people were sharing this with me, was go to financial planners, help them educate their clients, which are our borrowers, put your money to work with as little as 20% down, since we don't have to use income to qualify, as little as 20% down. That you might want to hit that next slide, because I know we've got a little bit of guidelines here.
Yep.
You can do a loan to 80% on a DSCR with no income. That part works really well. We don't, unlimited properties, very important, because what we've seen is the borrower on a DSCR loan, they either own one or two properties or they own a ton. And when I have a borrower who owns a lot of property, that's a complicated file. As an originator, I used to back away from those, but now this is a very easy loan. Yeah. Because the unlimited properties do not matter.
Yeah. And just going back to the financial planners real quick before we move on to the next subject. If you're a sophisticated borrower and you're thinking about buying an investment property, one of the first questions you're going to ask is of your financial planner. Like, what does this make sense for me? Is it the right time to buy a piece of property? Does it make financial sense for me to do it? Should I take the money out of the stock market to pay cash, or should I borrow? These are all questions that your sophisticated borrowers are going to ask their financial planners. And then the last thing I will tell before we move on to the next piece is the other places that people forget about all the time is your title company. If you've got a good relationship with your title company, you can go to them and ask for offsite mailings in whatever community you're trying to target, and they'll give you that list. And you can do it for 2 to 4, you can do it for single family, and you can know exactly who owns investment property in whatever market you're trying to target. So this is a really easy way for you to identify who the investors are in whatever neighborhood you're trying to target. All right, so let's make a shift here. So that's kind of the high level for our DSCR product and investors. Now we're going to shift over to self-employed borrowers. And this is a huge portion of our business. Over 50% of what we do is helping self-employed borrowers, either full doc, prime jumbo fallout, or bank statement loans. This is the biggest portion of our business. And this graph here it really is fascinating to me. If you look at this, it shows business applications since about 2004. And you can see that, up until COVID, you had this big spike. You can see it at COVID level around March of 2020. You can see that the trend for self-employed borrowers was increasing. But once COVID hit, the U.S. consumer responded dramatically by saying, I want to take advantage of this opportunity. And they started to create new and different businesses. And those businesses that were started in 2022, 2023 are all now viable bank statement borrowers. Because how many times have you start a business, you don't usually make money in those first year or so. Yep. So your tax returns aren't going to look great, but you do have an opportunity. If you see that trend increasing in income, you can see that there's an opportunity. So massive increase in the number of self-employed borrowers, and this is one of the reasons why non-QM business has continued to grow. And Dan, you asked the right question. Where do you find these borrowers? And you can take everybody through this. Where realtors are still a great source. Matter of fact, realtors, I say this all the time, are one of the largest cohorts of bank statement borrowers, actual borrowers. So they like these loans, right, Dan?
Yeah, we call them bank statement borrowers. They're really just self-employed borrowers that we cannot do a full doc loan because if we look at the tax returns, it's not going to work out on a DTI level. So we're going to take that bank statement borrower or that self-employed borrower, to your point, a realtor that may be self-employed a bank statement borrower, they may be a 1099 borrower. But we're going back to the same, that second or fourth bullet point. We're going back to the same point here. Your CPA, your financial planner, your tax guys, these are the source where you can find self-employed borrowers, because those borrowers, I'm not going to do anything. I don't know about you, John, but I'm not making a move until I ask my CPA, how's this going to impact today's and tomorrow's tax position for me? So I'm going to ask those questions. So we need to educate our brokers and our loan officers so they can help educate the financial planners and the CPAs, because we have to be able to document, again, ATR, bank statement loans follow TRID. So we've got to satisfy ATR, but we have a lot of solutions. We do these bank statement loans. Bank statement loans started out, to your point, you had to have 24 months of bank statements. Then we went to a 12-month bank statement. We can do loans at NewFi on a 2 or 4 month bank statement, as well as a 12 and 24 month. So please reach out to us for those types of things.
Yeah. Yeah. And the other thing too is these self-employed borrowers, these business owners, they travel in packs, I like to say. They know each other. They're friends with other business owners. So when you have a successful transaction, you're likely going to get more referrals from that person you close that deal with. And be thinking about where do I find people that are connected to business owners? So a lot of people don't think about identifying business bankers. One of the things that's not on here is a commercial insurance broker. If you know a commercial insurance broker, they're doing business with business owners. Those are great people to know and to associate with. So let's Dan, you want to kind of run through the
on a high level,
yeah.
Because we got a lot to go through in a really short time frame, but on a high level, you can see here, we do loans to 5 million. We go up to 90. People always say, what's your min FICO? Down to 620. But let me throw these numbers at you. What does our average loan look like? What is the average bank statement or self-employed borrower loan? As you said, 53% of our business is in this business bank statement program. It's for those self-employed borrowers. Our average, you can see, we go down to a 620 FICO score. Our average FICO score, 746. Self-employed borrowers need to have solid credit to grow their business. So they've got a 746 FICO. Our average LTV is 75%, because these borrowers have money and they're going to put that money to work. They understand that if I put it at 90, if I do a 90, my rate's not going to be very attractive. That's a challenging loan, but I've got money to invest because my CPA or my financial planner said this is a prudent decision. We do a lot of great things. We go up to $5 million per our guides. No exceptions to a $5 million loan, because that's our daily guides. And in the rate environment, 2-1 buy downs, very popular in the agency world. They're very popular at NewFi on a self-employed borrower loan. And I know we're going to talk a little bit about this I-10 borrower, ton of I-10 borrowers.
That's right. Yeah. The other thing that's interesting and always important to people, the entire mortgage business runs on commission-only salespeople. Whether or not you're an originator or an account executive or whatever, we all get paid on loan balance. And one of the nice things about bank statement loans is generally depends on where you are in the United States, but these loans are generally $150,000 to $300,000 more than a DSCR loan. And so if you're talking about trying to drive higher commissions on higher loan amounts, this is one way to do it, because that self-employed borrower wants the nicest house in the neighborhood. They want that shining star at the top of the hill. That's what they're trying to buy. And so it's a great opportunity to increase your commission.
And I'm going to say this last piece before I know you got to hop onto the next subject.
Yeah.
On a self-employed borrower, the one thing a self-employed borrower knows, they know their business. So when somebody says to me or to some of the salespeople on our teams, they say, how does the math work? How do I calculate income? I always time out. Ask your borrower, how much revenue did you generate in the last X? I promise you, they don't need to look it up. They know. They're self-employed borrower. They know their business. So if the borrower says, I generated $1 million in revenue in the last 12 months, That's a great loan. We can find solutions for it. Let's talk about that. When the borrower says, well, in the last 12 months, I generated $10,000 of income, I don't think we're going to be able to make that loan work. Ask your borrower. We're going to probe them with questions to learn about their business, and then calculating income. It's just basic algebra.
Yep. No, it's great. No, absolutely. And again, we're going through this really quickly just to give you a sense as to who NewFi is and some of the solutions that we can provide. But what we really want to do is be in dialogue with you. We want to have more conversation, deeper conversation. We've got account execs all throughout the United States that are ready to have those conversations with you. So please reach out and have those discussions so we can help you solve problems. So this next slide gives you a sense. Obviously, over the last 4 years, we've seen a dramatic rise in the number of immigrants into the United States, and this is going to create opportunity for more I-10 business. And so, where do you find these I-10 borrowers? Again, you start closing loans. We're going to get to this in a minute, but if you think about the whole process of referral-based business, which is really what we are, it's what we think you are. We know you are. It's when we have these conversations, where do you get your business from? It's all from referrals. Self-employed borrowers refer other self-employed borrowers. Investors refer other investors.
Yep, exactly.
I-10 borrowers refer other I-10 borrowers. So just make sure you are out there talking about it. And Dan, this last piece, the third bullet here, banks and credit unions. I love this one because these are people that are likely unable to close loans for I-10 borrowers.
That's exactly right.
So be in conversation with them.
What's interesting about the I-10 borrower is they're our neighbors. Their kids are on our kids' soccer teams. They're in our community. We would never know they would be considered an I-10 borrower because they're just our neighbor. We don't know anything. So the very first question you're going to want to always ask that borrower, you need to make sure they have credit established under the I-10 number. They may have an invalid social, and that's okay. That's okay because those things happen, but we're going to get credit established off of that I-10 borrower.
Right.
We do all doc types, so you can do full doc. You can combine that with self-employed or bank statement loans or 1099 loans, which is really helpful. We do them on owner-occupied and non-owner-occupied program. This is if you're in the communities where you do borrowers that pay their taxes under I-10s, please let us educate you on that. This is a wonderful market for you to, again, exceed those 25 goals.
That's right. Yep. All right. Last specific product we're going to get to, we'll cover quickly. This is our second lien product. And as you can see here, the total amount of equity in the U.S. housing market is at record levels. The debts remain low and values have continued to increase. And as a result, you're talking about $32 trillion worth of equity in the U.S. housing market. And that is something that's an incredible number. We think the tappable equity is somewhere around $20 trillion. And sometimes people are going to capture that equity through a second lien. And we've talked about this before, Dan, but do not forget about your past clients that you refi into a 3% mortgage.
Man, this is all. I know the next one's going to show a little bit of some numbers. This is all about that past client. For that client that you did a 3 or 4% Fannie Mae loan in 21 or 22, they're not going anywhere. Maybe they can't afford it. Maybe they don't want to. It doesn't make prudent sense to them. They've gone to their CPA. Their CPA said, hey, don't get rid of that 3 or 4%. But I want to tap some equity. Here's a live example. This is pricing from yesterday. So this shows you that if you're a borrower in this situation, we get a borrower who's got a $500,000 first at a very low rate. They're not going to get out of that. They want to grab some equity. Everyone says, hey, can I get a HELOC? HELOC's prime plus a margin. Look what NewFi offers today to you. 7 7/8 for this borrower. It's a 20-year fixed. Good FICO score, CLTV, taking out a little bit of equity. Like you said, John, that those values have gone up. We've got a ton of equity. This borrower is getting a rate in the 7s at par.
It's amazing.
You can charge 5 points and fees on these loan programs. It's just a simple 20-year fixed second mortgage.
Agency rates are in the 7s.
And most of these loans are done without an appraisal because we go off the AVM.
That's right. Yep.
Easy loan.
Yeah, no, an incredible opportunity to expand your business in a market that's basically flat. All right, so that's kind of the summary on the product side. This is we're gonna wrap this up pretty quickly here. We're gonna take you through just some thoughts on how to expand your business here. So a lot of people use non-QM as fallout, and that's a lot of our business. About 80% of our business comes from loan officers who just have a deal. They couldn't get it done on the agency side or the prime jumbo side, and they come to us to try and solve the problem. We love that business. But the biggest portion of our business, what's driving our growth today, is people that are actually selling non-QM for non-QM's sake. So they are going out and creating specific campaigns, email, social media, direct mail, whatever you're using today. We would just suggest that you start layering in non-QM products. And if you're not comfortable, you don't feel like you're a subject matter expert to help you with that, call us. We're happy to help you. I just did a podcast for somebody the other day that was not a subject matter expert in the non-QM space, asked me to go on the podcast and talk about non-QM for that loan officer. I'm happy to do that. We're all happy to contribute at whatever level you want. We'll show up to you if you want to go call in a real estate office and you want to talk about non-QM and you're not comfortable. We'll go with you. We'll have that conversation. We'll stand up on your behalf. We'll talk about you and your expertise and how we support you in that. So start with wherever you're comfortable. But then once you've done that, start pushing beyond those boundaries, because there's a lot of different ways to attract non-agency borrowers. But first and foremost, just start talking about it within your existing database of customers, and however you're going outbound, however that might be. Have a solution. And as we kind of go through this, the one thing that I will tell you is that our marketing team has done an amazing job at creating products for you. If you want flyers, we will create flyers for you. If you want a social media campaign, we've got social media campaigns outlined for you. We've got a playbook on both DSCR, non-QM as a whole, and bank statement borrowers or self-employed borrowers. We got playbooks specifically created for each of those niches, and for a second liens as well. So we're happy to do this with you one-on-one. If you run a company, we're happy to do this in a group setting as well, either in person or virtual, however you want. So this is just kind of the summary. We are pretty proud of the fact that we were NAM's 2023 Service Partner of the Year. We take our service levels seriously around here. We're approved in every state. We've got a great partnership with the people at Arrive. And I don't know, Dan, anything you want to add to this?
No, I would simply say ask questions.
Yeah.
I mean, at the end of the day, you need to probe your borrowers and let us help you, teach you what are those questions to ask. We think we're going down a bank statement loan and we end up on a DSCR loan. You're trying to do a DSCR loan and you can't make the DSCR ratio work, so you throw the loan away, and we're like, no, time out. Why don't we can pivot? That's what it's all about, is asking questions, being the subject matter expert on non-agency lending. We don't expect you to learn it all today, but we'd like to teach you. So just give us a shot.
Yeah. And I guess I would end with this, a couple things. One is, like, we absolutely love the relationship we have with AIME. We're proud to be partners with AIME, and we're happy to give you this playbook today. But be curious, ask lots of questions of your borrowers, dig deep with them. And if you don't know what questions to ask, pick up the phone and have that conversation. You can email Dan or myself. We'll get you in touch with a local account exec, and they can get you on your path to closing loans with NewFi today. We appreciate your time, and thanks a lot. Take care.
Thank you all.